Hello and welcome to Investing Confidential. A lot of questions out there since I last did a video. Is there a banking crisis? Should you be afraid of what's going on? Uh, I'm going to address that. I'm also going to give you my 2 cents on Credit Suisse and UBS. But first, let me address one thing. As anyone who's watching these videos, I don't ask for likes. I don't ask for subscribers. I probably should, but I don't. I'm going to give it another few months, and if I can't get my subscribers over 1,000, I'm probably going to bail. But anyway, enough of that. So let's talk about what's going on since the last time we spoke about the bear market rally. The rally is continuing. Okay, this is a bear market rally, as I stated before. As you can see, it's been bumpy from this chart. This is the S&P. But here's a problem. Okay, we're probably going to see this rally go higher. It's going to be bumpy. Stop and start, stop and starts, but it is going higher. But here's the problem. Again, it's the market breadth. Okay, as you can see here, market breadth basically means that, well, it basically means two things. If you see a small amount of stocks leading the way higher, that's very negative. If you see a broad market rally, if the breadth is broad, if there's a lot of stocks going up, that's usually very positive. That's usually a sign of a healthy market, a bull market. But as you see here, I mean, this is a very unhealthy market. The breadth is very narrow. You've got a small amount of stock leading the charge on this bear market rally, and it's not going to last. Okay, so now what? Okay, let's talk about this. Is there a banking crisis? As I've been saying from day one, no. Okay, this is a false narrative, folks. I mean, forget about conspiracy theories and everything else. The bottom line is, okay, the bottom line is everyone wants the Fed to stop. Okay, everybody. The banks in the US are very strong, okay, especially the large banks, Citibanks, JP Morgan, etc. They haven't been lending. Okay, alternative lenders have been doing all the crazy lending. These banks are mainly consumer lenders, and they've been very inactive up until recently. Okay, so the banks are very solid. Banks do not need, okay, to sell things. Okay, they own these securities. They can hold them to duration. They could go to the Fed window, okay, and borrow. And this is what they're doing. Okay, as you can see, they're going into this Fed window and they're borrowing at unprecedented numbers. Now, the problem with all this is that a lot of time, well, the Fed window is there for banks to borrow liquidity and lend out. But as you can see, the banks aren't lending anything out. What they're doing is taking all this money from the Fed, and a lot of them are paying out depositors. This is really bad. Essentially, what they're doing is tightening lending standards into a recession, into a slowdown. Now, this is classic. Okay, this is what causes deep recessions, when banks don't lend, when there's no money out there, and this is what's happening. Okay, so another reason why there's no, all deposits have now been guaranteed. This is what this moron Yellen said. Okay, and Powell and all these other idiots. Okay, they're guaranteeing all deposits. So don't be afraid of the banking system. Leave your money in there. Now, money market rates, as we talked about, pay higher rates. There's a way, if you have more than 250,000 in a bank, put a lot of it in money market. Money market, as you can see here, they're going through the roof. As I was saying, there's no reason to be panicking about the banks. Okay. Now let's talk about the Fed. Will they or won't they? They're not going. The Fed's done, folks. Okay. I applaud the Fed for trying to be a little hawkish, but they have no choice. Okay. They're being forced to stop. Okay. Will they pivot? Yes, I believe the pivot is coming. Will they cut rates? Probably not, because the bottom line is CPI is running hot. It's running hot here in the US. Okay. And it's running hot overseas. Okay. But they're going to cave into Wall Street. They're going to cave into the politicals, and they're going to stop. Okay. But here's some proof why CPI is running hot. This could be a disaster. Just a couple things. Look at soybeans. Soybeans are in everything. Going to the roof, ripping higher. Sugar, where sugar's in everything, ripping higher. Okay. What this all means is stagflation is now a likely outcome. Forget about recession. Recession is baked in. Now we're going to talk about stagflation being the likely outcome. And recession, Probability, to me, 100%. Okay, recession is here. You can see from the inverted, yield curve we've been talking about from day one. It's a done deal. Okay, now even some of the Wall Street guys who always want to be 100% positive, they have no choice. Okay, it's coming. Okay, now let's talk about who's screwed on this banking system. The small community banks, they're actually screwed. Okay, they've been lending, as you can see, more to commercial lending than the larger banks. Okay. And that's a problem because, as you can see, the vacancy rates for commercial properties are going through the roof. Obviously, for obvious reasons. Work has changed. The way we work has changed. It's changing all over the world. Okay. I was just overseas in a few different cities, in a few different countries and cities. It's changing everywhere. People are going in 2 days a week, 3 days a week, max on average. Some people are going in 5, but most people are going in only a few days a week. As these leases come up, boom, they're going to use less space, and these commercial buildings are going to be basically empty, half empty or totally empty, especially the old ones. Okay, but the large banks have no exposure. Okay, they lend mainly to consumers, as you can see. Okay, but they're going to get screwed as well. Okay, into the slowdown. Credit cards are already tapped out. Default rates are already going higher. And this is a reality. It's the reality of a recession. And this is going to affect all banks. But the US government's going to stand there and they will defend the banks. So I wouldn't worry about the banks. Okay. Also, Wall Street can't come to the rescue. Okay. Wall Street is basically alternative lending. They push alternative lenders. Okay. So capital markets after the Silicon Valley Bank is dead. Wall Street is dead, folks. Wall Street can't come to your so everyone's contracting their lending with the exception of the large banks with credit cards, but that's going to change. There's no alternative lending. They're going bust. Okay. So we're going to have a very long and deep recession. That's the bottom line. So prepare for it. So now let me talk about UBS and Credit Suisse. Okay. So, the Credit Suisse, I was shocked at the price that Credit Suisse went out for. Very, very shocked. UBS got the bargain of the century, folks. Okay. They basically got a bank with 45 billion of tangible equity for 3 billion. I mean, less than 10% of tangible equity. That's incredible. It's like buying a bank of less than 10% of book value. They gave up 5% of shares for a business with 50% of its revenue, massively. Plus, the Swiss government's backstopping everything. Now, Credit Suisse has some business issues, but this is a boom for UBS. They're going to be a global leader in wealth management, banking, et cetera, et cetera, et cetera, and even investment banking. So UBS does trade here in the US and ADRs. Take a look at it. I'm not going to recommend it, but certainly I can tell you that they just got the bargain of the century. Okay, so banking system's fine, but we're going into a recession. So if you're an investor, be careful out there.